Good evening. This is the Elliott wave update for the S&P 500 for Thursday, June 9th, 2022. An additional wild and woolly day here in the S&P. For the better part of the day, though, the S&P did hold to pattern where the B wave triangle looked to be coming to a conclusion, looking to be coming to an end. And then I started looking for a thrust up and out. I had discussed yesterday and continued to look at the market as finishing that triangle pattern. But here's the caveat. It truly has to hold pretty much where it is. And it needs to turn, complete, and thrust up and out. So let's kind of take a review of what the situation is and then take a look at the preferred view and then an alternate view. So the preferred view still continues to suggest that the market completed minor wave one of an intermediate third wave down and remains within the context of a minor second wave up. And within that, we've completed wave A and more than likely wave B. That sets the stage for a pretty strong C wave rally. And remember, all C waves are 5-wave structures. And so it could very easily just turn around, thrust higher, and end up back above 4202, which is that high, yet to have been exceeded, and on up to 4229, 4250, 4293 that we have here, 4300, and up to possibly as high as the daily 200, which currently is sitting at 4336.37. So what's going to get it up there? Well, thus far, it has been on the hype about what's coming, that the CPI figure is going to be okay, et cetera, et cetera, et cetera. So let's wrap it around that there's going to be a tremendous amount of weight, trading weight, that will come about that number, the CPI number, which is due out tomorrow at 5:30 a.m. Pacific Daylight Time, and then also 8:30 Eastern Daylight Time. I feel that because there's so much weight on that particular number and how the market should react and what it's really going to be saying about inflation, what that then tells us about the Fed, et cetera, that there will be a very strong reaction in either direction. So with that in mind, if indeed this small corrective pattern in a B wave is complete, then we will thrust higher. And that number is likely to then be the trigger, but it will be more dovish. It'll be more acceptable. It'll be more indicating that things are getting a little bit easier, a little bit better, et cetera, et cetera. So, and if that's the case, then again, we'll be looking for the move to get back above 4202, which again, it's failed to do thus far, and get itself up into those resistance zones that I just talked about. Now, on the other hand, if the market interprets that CPI number as negative and that inflation is still basically running out of control, that the Fed is still going to be perceived as being behind in taking action to control inflation, that will feed into now what CNBC, they're putting all these people out there talking about that the Fed is taking us into a recession to control inflation. Everybody's got their 2 cents and they're out to say it, and that's going to have an effect on what and how, though that number will be received by the marketplace. So if it is not received positively and it turns into a more negative situation, then a continuation of the current slide that began at the 2 o'clock hour primarily today, where that the market dropped substantially in that last 2 hours of trade, where the S&P finished down pretty heavily. So the SPX itself was down almost 100. So We will wait and see, of course, but if it does continue down, that it's going to put more weight on that this high at 4202 being the completion point of minor wave 2. And what this then is, I will figure it out, and it could very likely just be L1 and a very extended wave 2, possibly in the form of a double ABC. So these are all possibilities, and we're just going to have to wait and see how it all plays out for tomorrow. Now, let me add a few numbers here via Fibonacci to see what we're up against. First, let me just put in our straight retracements, which again continue to show we have 4202, then we have 4221, then we have 4317 to 4336, and that's where the daily 200 sits, with an upside possibility at 4390, very out there in the way out there. But again, above 4202, sure, I can see that. I can see a thrust. And again, remember that if it does go up in a C wave to complete the minor 2, all C waves are 5-wave affairs. That would suggest we're going to build up in a 5, and that's going to bring us back up to here. That would be if everything goes well with that number and the market just loves it and we start heading out. Also bear in mind, tomorrow is a weekly expiration, the one that's going to be in advance of the massive expiration that is due on the 17th of June for the monthly, quarterly expiration cycle. So, a lot going on. In fact, today, as we take a look at the board, we're going to see that stocks such as Apple slid through 5, closer to 6 strike prices as it kind of went up and down. Then Amazon sliding through strike prices, all of them. Google sliding through several, all the way down. Meta, aka Facebook, sliding through several strike prices on its way back down. As this continues to happen, the day before an expiration or the day of an expiration, it causes what is commonly called in the options world, gamma explosions. And that's where your gamma just explodes against your position, causing you to adjust in large numbers. And I've seen it before. I've had to partake in it because I was an options market maker. It can really turn ugly. And the fact that we're moving quicker and faster and bigger, it becomes even more aggravated because the positions in the options have gotten larger. Larger positions, you're going to have a larger move. So those are the two scenarios. The preferred view remains that this is actually the completion point of a triangle, and we revert and we go up. Now, remember, if that's the case, it should thrust up and out of the triangle. That suggests that from this level, it turns and it runs up, and it doesn't look back. It just keeps running up until we get to the width of the triangle. Right now, that width is about 76, and this is 202, about 50 points or so. So that would be pretty good, but that only takes us back to 73. And we need to go a whole lot further. So honestly, based on that, this is kind of leaning towards the fact that that minor wave 2 is done. And we continue to slide. That being the case, let's take a peek at what that wave 3 could possibly do. Again, we're taking all of this into consideration, and we're going to go up to there. It's not 4202. Let me just run one little correction here. 4202. And I need to correct that just a little bit. Hold on a second. Oh, 4202. Put that right there. Excuse me for the phone call. But the midpoint is 3807. 4631 is the correction. Okay. That just corrects us up a little bit. All right. So what we got is continued downside. Very initially, which we reached today, almost. Our first stop is 4,008. Then we have 3888. You see, there's a big black hole. We might find some at 3913. We might find some at 3978, but it's just brief. It's price support, possibly. Just giving a little bounce, maybe a little this or that, but I don't expect it to hold. But we could get a pause there. So some support 3978, some support 3913, but then 3888 is the fib support. And again, a little bit of 3872, and then we break. And the next one that we have down there is 3807, which is previous low. Right below that, 3790, 3694, 3622, 3555. And guess what? Wave 3 would be equal to wave 1 at 3379. Now, again, as I said in the NASDAQ, if we really start get going on this, I may have to adjust exactly what all of this is, because that's still pretty steep. But as I said in the NASDAQ, I am looking for primary wave A. So that's going to be 1, 2, 3, 4, 5 to complete primary wave A to be coming in down here. And then we get a massive sustainable B wave rally. So the one that I think everybody's looking to happen up here, I think they're just very, very early on. And we still got a lot more to deal with before we see a sweet, strong recovery. And that would be in the form of the B wave, and it would be a primary B wave, and it would be big enough to really push things all the way back up. Now, does it necessarily have to end here? No, it's all going to depend on structure. But right now, I've got only intermediates 1 and 2. And if intermediate wave 3 finishes up here, then I got an intermediate 4, intermediate 5. So we're still, if intermediate 3 stops here or here, then we get an intermediate 4 and an intermediate 5. Well, there's really no reason why it couldn't. I mean, we might find support to complete here at 3198, but everyone's going to call me crazy. But they probably thought it was crazy that the pandemic, raging pandemic, not knowing what actually it was or how it was going to, how many people it was going to kill, forced the market up. But really what forced the market up was the cheap money, was the government basically funding a recovery, paying people to stay home, allowing the economy to continue to roll, filling in the gap when money was not available. Well, now that's kind of come to roost. We cannot continue to create trillions of dollars without consequence. We can't do trillions of dollars on low interest rates, subpar interest rates, sub 1% interest rates. And whether everybody thinks, well, yeah, we can, it's like, all right, I suppose, yes, we could, but it would be the demise of the United States economy. So at the demise of the United States economy. So that's really what sits behind the reality of why we're doing this. Now, back to the hourly chart. Let's take a look on the inside. That was a very steep drop. So again, while this triangle still holds, the market needs to react and it needs to get back up, because otherwise this is not a fourth wave. Otherwise, this is minor 2, and we've got 1 and then A, B, C. 1, A, B, C. Who knows? I'll figure it out and I'll count it out. Right now, it is best looked at as a series of 3s. And that's what a triangle pattern produces, an A, B, C, D, E, all 3 waves. So keeping in mind, if we pick up speed and we drop, we have very little support coming off. We have price support, but the fibs you can see break into black holes, and that will drive us additionally lower. So I am going to leave it there. And I'm going to say, continue to follow the moving averages. They work. They keep trades in line. They keep giving you entries and exits. So please continue to use them wisely. Use both the preferred and the alternate views. When you start to see one coming into play, you know what you got to look for. You know what the market needs to do to give you the confirmation that that's exactly what's happening, and then we can trade accordingly, both negative and positive. So I've given it for the preferred view, which is more that we're going to go up, and the alternate view, which is we continue to slide lower. Both, you now know what to look for so that when they start to kick in, you can participate. I'm going to leave it right there. Our next update will be on Sunday, June 12th.